Hi there, I'm Doireann Mc Dermott. Well, viewers, today Hungary is releasing minutes from its March meeting after it actually cut rates to a record low, 5% by 25 basis points. Now, I'm joined on the line by Andras Oszlay, an analyst at DZ Bank in Hungary. So, Andras, what do you think about this cut and what are you expecting to see in the minutes?
Well, there were expectations that there will be an even deeper cut because the new leadership of the central bank, which came into office in early March, could have introduced itself in such a way as cutting even 50 basis points. However, I think that this market turmoil which followed the nomination of Mr. Matolcsy, who was known as an unorthodox Minister of Economy in the Orbán cabinet, there were foreign weakness and also Hungarian CDS spreads quite substantially widened. So I think that this prevented the new leadership making an even braver cut. This explains the 25 basis point cut. Of course, this 5% is an historic low, but it seems that both macroeconomic fundamentals, I mean low growth and sharply falling inflation, as well as market perceptions, allow for continued rate cuts in the future. Just recently, I looked at where forward rate agreements currently stand, and even in a 6-month horizon, markets may even price in a more than 100 basis point cut, which makes it possible, at least in the interpretation of the Monetary Council, to continue these cuts. So I expect in the minutes to see a further argument that macroeconomic fundamentals are supportive for more cuts, especially since the inflation target may be achieved alongside lower rates. So if no new risks emerge on the horizon, then I think that the Council will continue cutting rates further.
And the Deputy Governor of the Hungarian Central Bank, Julia Karali, has resigned in protest to the actions of the central bank. Now, she said the new governor's changes could actually harm confidence. In terms of confidence, what are you thinking?
Well, I think the main concern here is that there is little or no relevant monetary experience in any of the new board members. Mr. Matolcsy himself has not really been involved in banking matters earlier, and the new deputy governor Adam Balog also was more busy with tax issues than direct banking matters or monetary matters. And to be honest, even within the Monetary Council, the external members are not the most respected experts concerning monetary issues. Therefore, this is, of course, a concern because there is no one really to be respected of his achievements in this area. That's a concern. And, of course, since all the new leaders came from the Ministry of Economy, which used to be a more optimistic forecaster of Hungarian macroeconomic developments than market analysts or even international institutions who make forecasts for Hungary, there is some concern that probably the new macroeconomic forecast of the central bank will be biased because the new inflation reports, macroeconomic figures already reflect that the official government forecasts are not really criticized. Now, it's, of course, a possibility that they have changed their view because of the changed circumstances. Nevertheless, it's still suspicious to a certain extent, and therefore, if this is indeed the case, then markets may begin to question whether the inflation reports, macroeconomic forecasts, are indeed unbiased. And if they have the suspicion, then this is, of course, can lead to a loss of confidence.
And the foreign hit at 1-month high and yields on Hungary's 10-year bonds fell to a 7-year low as the central bank started meetings with commercial lenders to work out the details of a plan to boost loan growth. Now, what do you think about this plan to boost growth and about market reactions?
There were fears that there will be very radical announcements about how to boost growth by, unconventional measures from a central bank, and there was an agreement that Hungary is not a big economy enough that unconventional measures would really do much benefit to growth. Indeed, we think that the announced measures are not themselves enough to boost lending substantially. Of course, there are some companies who may find the new environment more friendly, and therefore investments can still increase, but the effect will be limited because the demand part of the whole investment story is yet missing. The growth outlook is very poor indeed, and therefore even if there is cheap funds available, this does not automatically mean that there would be also demand for them, because no one can really see where profitability will come from. So I think the growth effect will be limited. On the other hand, however, this program is not so radical and will only commit a fraction of the country's currency reserves to this policy plan, and therefore I think that it was a huge relief for markets that the Hungarian Central Bank is not going to draw down its reserves, which would create problems, and markets would become nervous about this. So there was also some relief, and the fact that commercial banks also stated that they are ready to participate in the program after working out the details, this is also supportive because, as we all know, the Hungarian banking sector suffers from heavy tax burden under the Orbán government, and there were fears that their burdens may even be increased. Now, the fact that they are supportive to this program probably is a promise that there will be no more burden on the commercial banks, and this is what explains the gain of the forint and probably also local bonds. Now, today, in fact, the forint has not been a star performer, at least up to now, because there may be some profit taking. There are some new information that will come out soon. For example, Julia Király, who, as we already mentioned, resigned 2 days ago, her successor will be named by PM Orbán probably today, and of course the market tries to figure out who the new deputy governor can be. This can be a source of concern, but also simple profit-taking can be a reason why the forint does not perform so well today. However, I don't expect that it will again break above the 300 level versus the euro, so probably this is just a short-term volatility which we now witness.
Thank you very much. Well, viewers, I am afraid that is it for today, but do join me tomorrow when I'll be looking at tomorrow's biggest story of the day for the Dukascopy Press Review. But for now, goodbye.